Welcome to the risk management section of the course. So in this section then, we're going to look at news planning and awareness, simple money management, some more general aspects of risk management, and then finally I'm going to talk about why traders fail to make money consistently. So I'll see you in the next lesson. Okay, in this video we're going to talk about news planning and news awareness. So let's start with news planning first. Here I am in MT5 and you can see at the bottom in the toolbox, I'm on the calendar tab, okay? So MT5 actually has its own inbuilt news calendar. If I just stretch this up, you can see that it's got lots of events in here from loads of different countries and they're all categorized as high, medium or low impact. Now, one thing I want to point out is that with regards to things like the impact, the high, medium and low, this will actually be different depending on the source that you use. So in an earlier video, you saw me actually recommend a news website. Now I know that some of the events in here are categorized as sort of, for example, high, but on the website they might be medium, and something on the website that's classed as medium on here might be high. They're all done by the risk team at the relevant company, and each of them sort of do things a little bit differently. You'll also sometimes find the timings are slightly different, especially on things like speeches. So speeches sometimes tend to be postponed or rescheduled at the last minute, and some news sources are better than others at updating that time. Okay, so that's just something to be aware of. But news planning is basically checking the news each day and then marking it on your charts. You need to be aware when you're actually approaching a news event. Now, there's a really easy way to do that. You can get the timings off here, and then you can get hold of a line and you can literally just draw it on and then color it red or whatever color you want to say. At this time here, this is a news event. So as the day progresses, more and more candles and you're getting closer and closer to this event, and then you know that's when the event is going to happen. So that means that you're not caught out by something like this. Imagine you didn't mark the news on your chart this day. You started to, trade, and then all of a sudden you get this huge move. I see this all the time in the groups and the forums and stuff like that. People posting, oh my God, what just happened? Pound US dollars just exploded higher. It's just hit my stop loss. They had no idea this was going to happen. That's the power of news, okay? So news planning is very, very important. Now, there is a little tool. This is Dash Plus. This is one of the algos that I've made. It's a really good tool for traders. You'll notice this little calendar symbol. So on here, you can see all of the events that are going to happen. You can have it only the sort of symbol currencies from pound US dollar. If I turn this off, you'll see it'll show all the various different countries. A really good feature is you can draw the events. If I click this button, it's going to draw the news events on the chart, and it's actually drawn on, these obviously past events. And today is Saturday, which is why it's not drawing events for the next couple of days, because there aren't any. But you can see future events, okay? And then you can just click on it to get the information on what's about to happen. So this is really, really important. Now, if you're on MT5, as I said, you can draw it on yourself if you don't have this tool. You can also do exactly the same thing in TradingView, is you can draw on vertical lines to mark the news events. So that's news planning. Now let's jump over to TradingView and we'll go through news awareness. Now when I'm talking about awareness, I don't just mean awareness that news is going to happen that day and at what time. I mean awareness of news in terms of what news actually does, how it behaves and what's likely to happen. You need to understand the relevance of news sort of compared to your current trading situation. Let me give you an example. If we take this day here, this is actually the London session. I know it doesn't look like it because literally nothing happened. And that's because the whole world was waiting for this news event, okay? So this was, I think, inflation data, it was CPI. Yeah, so this is inflation data. Now for the whole London session, the traders did nothing. As you can see, the market went totally sideways and then exploded. So this was people who weren't in a trade, did not want to trade, okay? So they knew that news was about to come out and they didn't know which way it was going to go. Therefore, they did not want to put money in the market. So that's exactly what I'm talking about with news awareness, is knowing that it's going to happen, looking at your current trading situation. Okay, I'm not in a trade. I don't want to get into one just in case it just flies to my stop loss, okay? If you are in a trade, you're in a different situation, especially if you're using a system like mine. Maybe you're trading multiple pairs. Maybe you have multiple trades open on multiple pairs that will all be affected by this news event. Now, that's a very different situation, okay? So then you need to start thinking, okay, do I need to hedge? Do I need to close, partial close? You have to make a plan. This is all part of news awareness, okay? So this should all be relatively straightforward. So now let's get to the actual interesting bit, okay? So let's have a look at how news actually behaves, what is likely to happen during a news event. And all you need to do is apply this to the situation you're in. So if you have no trades open, then the news presents an opportunity to trade, okay? If you do have trades open, then it presents an opportunity for you to do something in advance to, to make your life easier, make it more likely you'll benefit from the news. So the first thing to know then about news is that it often ignores the data. In fact, let's just have a look at this. So here we can see inflation data, and let's just have a look at this one, the year-on-year inflation rate. So they forecast this to be at 3.5, and when the data was released, it was actually at 3.4. So inflation then was lower than they expected. Now, people like to form theories, okay, and say, okay, well, if inflation is not as high as they thought, maybe the economy is in a better state, maybe there's more chance they're going to lower interest rates, all kinds of things. What you tend to find is that it's incredibly complex, okay? And most of the time, what you think the market will do in response to the data is often the complete opposite of what happens. And you'll see this so many times. Now, in an earlier video, I showed you an algo that we built that analyzes news data, and it pulls in hundreds and hundreds of previous news events. And it looks at how many times the market went up, how many times the market went down. And this is based on news breaking, whether or not it was predicted correctly, if the forecast was correct or incorrect. And do you know what we found? It's pretty much 50-50 no matter what. So to sum that up, news often ignores the data. Even if the data suggests the market should fly up 1,000 pips, what usually happens is it drops 1,000 pips. It is 50-50. There is no real pattern to it, okay? So that's the first thing to know. Don't be obsessed with the data. Whether the data is good or bad, watch the chart and see what happens. Okay, the next thing, and possibly the most important thing to know about news, is it very often goes the wrong way first. Now, I don't really want to get into stop loss hunting or, liquidity grabs and all these other theories that people have as to why this happens. It doesn't matter. All you need to know is that it often goes the wrong way first. Let's have a look at the 3 examples on the chart right now. If I just move this little line over, in fact, what I'll do is I'll actually I'll draw a little arrow. We'll stick that here, pointing to this candle, and then I'm just going to delete this line. So this is the candle we're looking at. This is the news candle. Here is the open. What did the market do? The market came down to test the 250 level before it went up. So it went the wrong way first. The market went down before it shot up. Let's have a look at the next news event. Let me just delete that, and we'll put a little arrow here like that so we can see it's this one. Now, in this case, the market opened here and it shot up. So it shot up, and then what did the market do? It came down. So yet again, it went the wrong way first. The market pushed up really high, tested this 250 level and the 200, and then came down. Let's have a look at the next event. I'm going to have to draw my arrow very small, and here it is. Just about fit that on there. So look, the market came all the way down, tested this low, and shot back up. So again, it went down before it went up. It went the wrong way first. You will see this all of the time. This one may not be particularly clear. If I drop down to a 1 minute chart, you would see very clearly it went the wrong way first. So that's the next thing to know. Then here's the interesting bit. News often retraces hard, very hard, typically 50 to 100%. Let's have a look at the 3 examples on the chart. This is a 1 hour chart. So this is the first hour of the news event breaking, okay? So price shot up. What happened next? It retraced 100%. This is where the news was broke. This is where it finished. It came all the way up and all the way back down, 100% retracement. Same with this one. Price went up, came all the way back down. Here was the start of the event. That there is 100% retracement. It actually continued much further. Same with this one. Price came all the way down, all the way back up in one candle, 100% retracement. And then the market continued up a bit higher. So news very often retraces. How is this useful for you? Well, if you're not in a trade and the market fires off in one direction, you wait for that momentum to die and then you trade it back the other way. In all 3 of these cases, you would have won the trade. If you were already in trades, if you already had sell trades on, then as the market shot up, you could have added more at a set distance or a sensible distance, or again, just waited for the momentum to die out, show a sign of reversal, sold it back down, and then you got out of everything at a profit. Again, all 3 of these news events, that would have worked perfectly. So knowing that news retraces hard is another opportunity for you to benefit from news. Finally, news often immediately tests the nearby levels in the market. Now, this sort of is to do with what I mentioned earlier. People say that, they stop hunting, or it's a liquidity grab and all the rest of it. Maybe it is, maybe it isn't. Who really cares? All I know is that the market will very often go for the nearest level, or not even necessarily the nearest level, but a important level on the chart, a level that stands out. In this case, the market was only a few points away from the 250. It pushed down and tested it and shot up to the next 250. Now, on a 1 hour candle, you can't actually see the reaction, but there was one. Drop to a 1 minute chart and you'll see that it reacted. It actually pushed through and it looks like it stopped in the middle of nowhere. If I grab my fib and stretch this across, you'll see what it's actually reacting to is the 50% level. So again, another major level in the market. It's literally tested 3 major levels. This one was the first, this one was the second, this one was the third. It immediately tests the nearby levels in the market. Let's just delete this for a second. Let's have a look at our next one. Price pushed up. It tested the 200 MA, that's this blue line. It also tested the 250 level. It's tested 2 major levels immediately before shooting down. Where did it shoot down to? Not to some random place, but the next 250 level. So again, it immediately tests the nearby levels in the market. Let's have a look at example number 3. Did not make it down to a 250. It wasn't a million miles away, but look, there was a very obvious low. A very obvious low, shot down, tested the low, up it went. Where did it go to? The 250 level. So again, it immediately tests the nearby levels in the market. So even before the news happens, we can be pretty confident that whatever the data says, we don't really care. It'll go up or down. It usually goes the wrong way first. It usually retraces really hard after it's gone the wrong way. And it usually immediately tests the levels nearby. So even without seeing any of the news data, at any point, we can make reasonable assumptions, can't we? If there was another news event here, I just draw it on. If I say that there's a news event here, we're in a trade, what would you expect to happen? Well, reasonably, you would expect it to test at least this 250 level, maybe these lows again, or maybe shoot up to this level with the MA and the other 250. So already, without even knowing what the news is going to do, we can make reasonable assumptions. If it shoots up, you can obviously see there's some wicks, there's a level, there's an MA, there's all sorts of things that indicate that it could drop back down from there. Why? Because a news retracement is likely. You can see an area it's likely to target, and you know that you might get a 50% reversal, 100% reversal, or even more, okay? It's likely to reverse really hard. So it presents a really good opportunity. So once you understand the news, it's of huge benefit to your trading. If you don't understand anything I've said in this video, please watch it again. Feel free to ask me any questions.